Yes, hi there, good morning. It's Jovi Overo at Beta 2 in London. It's the 10th of August 2011. The time is now 09:35. Yesterday saw another period of high volatility. The equity markets, now they retraced a big chunk of the large down day that we saw on Monday. Yesterday we had the FOMC policy announcement, which saw the Fed give a timeline to the extended period language and pledging to keep rates low for at least until 2013. The US dollar closed lower on the day, helping commodities rally. Now for the Fed, it was a big change, pledging to keep rates low for 2 years rather than the previous pledge, which translated into around 3 months or so. The Fed language on the economy has changed also substantially, as it now acknowledges the fact that economic growth so far this year has been considerably lower than the committee had expected. The Fed, I would say more so than any other central bank, is running low on policy options, and the reaction on stocks especially reflects the fact that the markets are now sensing this. If we look at the market's verdict on the Fed's decision, that was initially, well, in fact, that was positive. After the initial dip lower, stocks ended the US session in a positive territory, with a better tone having been carried through to the Asia session. The Aussie has also pulled lower away from parity, with the greenback around 0.7% lower since the announcement first came out. If we look towards the SNB, the Swiss National Bank and the Bank of Japan, they have well and truly been left high and dry. After the policy measures of last week to curb the strength of their currencies, both the Swissy and the yen can only stand and stare at the relentless rise continues. The Swiss franc is now nearly 3% higher versus the euro compared to where it stood just before the Swiss National Bank's easing of policy on Wednesday of last week. Meanwhile, the yen, that is right back to its pre-intervention levels versus the US dollar. The Swissy's move, I would say, was more understandable for two reasons. Now, firstly, the SNB did not come out and sell the franc directly into the marketplace, and secondly, the fact that the Swissy is now a picture of fiscal austerity compared with the yen and most other major currencies has also caused it to be pretty much singled out as a safe haven status. The only other real competitor out there is gold, which naturally is a dollar-based currency. Sorry, naturally dollar-based, so it carries also its own risk. Further intervention, I would say, from both respective governments, the Swissy and the yen, is still a further risk. For more views and market reports, as always, do log on to our website. That will be www.beta2.co.uk. Thank you.